My dear students, today we shall discuss about the debentures, issue and redemptions in corporate accounting. That's also an important topic in corporate accounting. I, Dr. Harblas Sira, Associate Professor, SCD Government College Ludhiana, will discuss with you regarding the debentures, issue and redemptions. This is the syllabus of corporate accounting. We had earlier discussed underwriting of shares and debentures. Next is issue and redemption of debentures. And most probably there is a question in the examination uh, regarding the debentures issue and redemption. So that's why it must be prepared very carefully, and all numericals, all illustrations to be done. As we know that companies debentures, as we know, this word has been derived from the Latin word debere, which means to borrow. So debenture is a written instrument acknowledging a debt to the company. It contains a contract for repayment of principal after a specified period or intervals or at the options of the company, and for payment of interest at a fixed rate payable usually either half yearly or yearly or on fixed dates. There are different sections uh, relating to the debentures, but we shall be discussing only few sections. First one is the definition, that is under section 2 subsection 30 of Companies Law 2013, and there is section 44 which explains about the nature of share and debentures, and section 71 is relating to the uh, provision relating to the debentures. According to section 2 subsection 30, definition of deposit, according to section 2 subsection 30, definition of deposit, debenture includes debenture stock, bonds, or any other instrument of a company evidencing a debt, whether constituting a charge on the assets of the company or not. So, this is not compulsory that the debentures will have any charge on the asset of the company or assets of the company. Section 71 is relating to the debentures also. There are different provisions relating to the debentures. Especially a company may issue debentures with an option to convert such debentures into shares either wholly or partly at the time of redemption. And similarly, no company shall issue any debenture carrying any voting right. And secured debentures may be issued by a company subject to such terms and conditions as may be prescribed. So there are different provisions relating to the debentures in section 7. There are different types of debentures. These are, number one is simple or secured debentures. In case of simple debentures, there is no security for the payment of interest or the principal, whereas in case of secured, this is also called mortgaged debentures. It means there is a security of payment of principals as well as of the interest. In case of redeemable and irredeemable debentures, as the name describes, redeemable means that it will be redeemed after a particular period of time, and irredeemable means that it will not be. Debentures are retained as a part of the permanent capital structure of the company, and they are also known as perpetual debentures. So this is forever. And next is first or second ventures. First or second ventures means First debentures are those debentures which are paid first before any payment is made to another type of debentures, and the second debentures will be paid after the payment to the first debentures. And next one is bearer or registered. Bearer debentures are transferable per bearer without endorsement, and they are just like bearer checks or government currency notes, whereas registered debentures are made out in the name of a particular person who is registered by the company as a holder. And similarly, there is convertible and non-convertible debentures. Convertible debenture means that which are given an option to the debenture holders to convert them into equity or preference shares at the stated rate of exchange after certain period, whereas non-convertible debentures are not convertible into equity shares or preference shares afterwards. It means now we shall discuss about accounting treatment of issuing of debentures. As we know that there are different conditions of issuing of debentures. Uh, it may be issued for cash. When these are issued on cash, we make an entry that is bank account debit because money is coming, discount account debit to debenture account to debenture premium account. If on discount, we debit the discount. If it is on premium, that we credit debenture premium. So the entry becomes bank account debit, discount account debit to debentures account to debenture premium account. But sometimes we don't receive cash, but instead of cash there is consideration that we are buying something and issuing debentures. So at that time sundry assets are debited to vendors account, and next entry will be vendors account debit to debentures account. And sometimes these are issued as collateral security, that we are arranging a loan, and as collateral security the debentures are issued. In first case there may not be any entry, so this is shown only in the balance sheet as a note, that for memory purpose, for the disclosure purpose, for the transparency purpose, we want to show that we have issued the debentures as collateral security. So if we are unable to pay the loan at that time, they will be taking the debentures. And number 2 is we make debenture suspense account to debentures account. So this entry is made if there is an entry, reverse entry after the payment of loan, debentures account debit to debenture suspense account. So this is the initial entries we make in case of issue of debentures. Now what will be the accounting treatment when there is a process of issuing of debentures? At that time we make at the time of application or receiving application money, we know bank account debit to debenture application account, and when we transfer that application money to the debenture, that is the debenture application account debit to debenture account. And sometimes there is excess money or surplus money we have received in application money, that is transferred for allotment, and we make entry debenture application debit to debenture account to allotment account. After that when the allotment money is due, debenture allotment debit to debenture account, and allotment money received, bank account debit to debenture allotment account. Next calls are due, debenture call account debit to debenture account, and call money received, bank account debit to debenture call account. Therefore, we make entries at the time of application money, transfer to the allotment money due, allotment money received, call money due, and call money received. Next is there are different conditions. We issue at particular condition and we redeem at particular condition. What when we issue the debentures, at the same times we know how we will be redeeming the debentures. What will be the obligation or the responsibility or the liability with the company at the time of redemption. So when we issue, we are concerned with the provisions of redemption also. So when the condition is we issue at par and redeem at par. At par means at the same rate. We issue at the same rate, we redeem. So bank account debit to debenture account, and at the time of payment, at the time of redemption, debenture account debit to bank account. Now second condition is issued at premium, redeemed at par. Now we are charging more money or we are taking more money from the debenture holders at the time of issuance, but at the time of redeem we will be redeeming at par, at the same price, at the nominal price. So we will be making entries, that is bank account debit to debentures account to security premium reserve account. So because we are issuing at premium to security premium reserve account, we use the term security premium reserve. And at the time of redemption, the simple entry we will be making debenture account debit to bank account. And next the condition is issued at par, redeemed at premium. So now we are issuing at par and redeeming at premium. So entry will be bank account debit. Now bank account debit, loss on issue of debentures to debenture account to premium on redemption of debenture account. So at that time there is a loss because we have issued at par, now but at the time of redemption we have to pay more money to the debenture holders. So at that time the provision is required. For that provision we make the entry to premium redemption of debentures, and the balance of debit and credit is loss on issue of debentures account. And at the time of redemption, because we are redeeming at premium, debenture account debit, premium on redemption of debenture account debit to bank account. Now there is issued at a discount, redeemed at premium. At that time we make entry bank account debit, loss on issue of debenture account debit. It is both in both cases we are issuing at discount, that's also a loss, and redeemed at premium we are paying more money, that's also a loss. So both discount plus premium is our loss. The entry is made loss on issue of debenture account and to debenture account, and whatever premium is there, we will be making that. So at to premium on redemption of debenture account. So at the time of issuing bank account debit, loss on issue of debenture account debit, that is discount plus premium, to debenture account to premium on redemption of debenture account. At the time of redemption we will be making entry debenture account debit, premium on redemption of debenture account debit to bank account. Now we are issuing at premium and redeeming at premium, but there may be the difference at the sometimes the premium at the issuing of debenture may be more, and uh, at the time of redemption it will be or maybe less, and vice versa. So the entry will be accordingly. So we will be making entry uh, that is bank account debit, loss on issue of debentures account. But will be loss that if the premium on redemption is more than the premium on issue, that is our loss. So that is the entry will be loss on issue of debenture account to debenture account, and uh, the premium to premium on redemption of debentures, that will be a provision. And if the premium on redemption is more minus the premium on issue, that is the capital reserve. And that this difference means that premium on redemption is more and the premium on issue is less. At that time this is loss, but if the premium on the issue is more but at the time of redemption it is less, that will be capital reserve, because we are gaining. The difference is capital reserve account. So there is loss on issue of debentures. If there is loss, if there is capital profit, that will be transferred to capital reserve account. And at the time of redemption, at premium debenture account debit, premium on redemption of debenture account debit to bank account. So next comes debenture account. Debenture account means that this is relating to the discount. We are issuing the debenture at discount or there is a loss, one and same thing. So in case of discount or loss, we capitalize it. So it will be written off in the number of years, and it means that we will be writing off unamortized discount in number of years, and this is to be shown under the non current assets in the balance sheet, and ultimately there will be profit and loss account debit to discount or loss on the issue of debentures. So ultimately it will be contributing to the profit and loss. The first case is Delhi Limited issued 10,000 9% debentures at discount of 10% but redeemable at par. And the second one is Punjab Limited issued 10,000 9% debentures at par but redeemable at 10% premium. The third case is Himachal Limited issued 10,000 9% debentures at discount at 12% but redeemable at 10% premium out of profits, and face value of the debenture is 50. This is not 50, this is 5. So in three cases we will be discussing different alternatives, issuing and redemption. So the conditions are given. In first case, this is issued at discount, bank account debit, discount on issue of debenture account debit to 9% debenture. This is the entry we know, and total 10,000 at the rate of 5, so total are 50,000. Now this is at discount of 10%, 5,000 is the discount. So ultimately the entry would be bank account 45,000, discount on issue of debenture account 5,000 to 9% debenture account. Now at the time of redemption, because we are redeeming it at par, debenture account debit 50,000 to bank account 50,000. In the second case, there is issued at par but redemption at premium, so there will be loss. Bank account debit 50,000, premium of 10%, that is our loss on issue of debentures 5,000, to debenture account 50,000, to premium on redemption debentures 5,000. To premium on redemption of debenture means we are making provision for the premium at the time of redemption. That will be considered while we issue, we have to arrange the money. And at the time of redemption, because we are redeeming at premium, the entry will be debenture account debit 50,000, premium on redemption of debenture 5,000 to bank account. So total 55,000 we have to arrange. And similarly, in next case is issued at discount. Bank account debit 44,000 because it is at discount of 12%, 6,000 we are giving discount, and we are redeeming at the premium, that's also a loss. So at 10%, 5,000 plus 6,000, 11,000 is the loss. The entry will be loss on issue of debenture account debit 11,000, to debenture account 50,000, to premium on redemption of debenture 5,000. And at the time of redemption, when we redeem on the premium, so we require 55,000, debenture account debit 50,000, premium on redemption of debenture. Earlier we had made a provision of 5,000, now we are debiting it. Premium on redemption of debenture 5,000 to bank account 55,000. And in next case, redemption out of the surplus whatever the nominal value, the entry we will be making surplus account debit to general reserve. So this with the nominal value. And there is interest on debentures. So interest is related to the profit and loss account, this is loss, and we will be making entry interest on debenture account debit to debenture holder account to income tax payable account. So whatever the income tax payable, this is the liability of that person, and when we collect, this becomes the liability of the company to pay to the income tax department. So interest on debenture account debit to debenture holders account to income tax payable account. And lastly, we will be paying them off debenture holders account debit to bank account. And this is all with the debentures issuing and redemption part 1. In next lecture we shall discuss the rest of the topic. Thank you very much. I hope you will enjoy this lecture and will do the needful, because this is now your turn to do the things. Thank you very much. Sabka bhala ho. May all beings be happy. Thank you very much.